What if I don't know notes and I go to you and I have money and I send you a note that's terrible? Can I use you to bounce an idea off and say, is this a good note? I mean, or would they
I
get
think
blacklisted?
no, I don't know. They if they go to the bank, they're not. Then the banker's not going to. It probably won't even listen to them, and they'll never get a chance to probably present that again. I would say go to Nathan or go to David.
Yeah.
Go to the experts. The network that
Yep.
you've created.
Hey, everybody. Dave Putz here from JKP Holdings. Alongside me, as always, Mr. Nathan Turner. What's up, my
Hello,
man?
hello. I'm not in my office today.
Oh, a
On the
little
road.
different. That's a good thing.
We'll see. That has yet to be
This
seen.
is true. Live things, always crazy things happen. So hopefully it works out okay. I'm sure it will. So
Yeah,
let's, summertime is amongst us. We're just diving in, doing all kinds of fancy stuff in the summertime.
yeah,
Spend time with the family, eating it up for us northern people that aren't from the south, right? So the summertime is like a new thing for us. It feels like. So
yeah, yeah. We've got some great stuff. I get home. I'm in Chicago right now, dealing with this eviction that you've heard me talk about before. If you haven't, go look it up. It's not done yet. We're almost there. Hopefully today. We'll see. And
yeah,
then I am home for a week, and then we take my daughter down to school, and then the week after that, I'm gone at it's a youth camp for entrepreneurs, teaching kids how to become entrepreneurs. I'm excited about
nice.
that. Put on by the Rotary Club, so that's gonna be really cool. So fun stuff. Looking forward to it.
That's awesome. I'm glad to hear that. That's something I think is underappreciated with everything, right?
Yeah,
Um, Getting kids involved, they don't listen to parents, so
I know.
so that's awesome.
Yeah, it's been
Um,
fun.
Hopefully the kids enjoy it. Hopefully they do well with it. I know that they'll get excited. They've been at the DME and stuff like that.
Yeah,
Um,
yeah,
and for those who don't know us, we've been in the note space for 15 plus years. I own JKP Holdings, Nathan Ernest Investing. Different companies, same idea. So we put this show on for weeks and weeks and weeks, episode like 139 today, and we
yeah,
bring on different guests. So if you're in the seller finance, owner finance world, we're for you. If you're buying notes, we're here as well. And we try collaborating that kind of stuff on different shows.
yeah,
This will be recorded, it'll be in YouTube and podcast. So please check it out. Today's show, before we dive into it, will be about borrowing to buy notes. I think that's a big thing people want to know about. How to do that. Is it possible? Well, we're going to find out from Ryan today. But before we do that, we're seeing a lot of inventory recently. I'm getting tapes from different
yeah,
people, some non QM stuff,
yeah.
and some seller finance people who I recently talked to didn't want to believe Dodd Frank existed, which was interesting. Sorry if I call you, I won't name names, but it does.
It does, and it's important,
Yeah.
and not just important for the borrowers and being compliant and all that. That's already important, but the reality is it does exist, and if you abide by those regulations, we can actually pay you more for your loan. So it really is important for people to do this the right way, the way that it's been spelled out. Whether you agree with it or not, it doesn't matter. The point is, it's there, and it's a way that if it's done correctly, we can pay you more. So it really is beneficial for you to go through the right steps. Do call the underwriter, and he'll get you figured out and make sure that you're doing it correctly.
Absolutely. Shout out to Dan. He's not sponsoring the show this week, but he will be in the future, I'm sure. So, guys, if you are creating notes, feel free to reach out to us. We'll structure a way that you can buy notes better.
Yeah,
Um, we have some videos on doing that. We have some ideas of how to do that. Those are looking to buy notes. This isn't. We're looking at a different curve right now than we did 10 years ago.
hmm,
People who created notes are really interested in what we're talking about because sometimes defaults happen. They're trying to buy more. I have a guy in Texas saying, I want to buy a whole lot more. I can do more stuff. Can we just structure in a way that we can buy things? And for that guy, we talked about was the 70-20-30 kind of idea, right? Sorry, 70-20-10 idea where you create a first and a second lien, and then you sell the first lien and get all out of it. If you
yeah,
want more information, let us know. But with this and said, for note buyers out there are saying, hey, listen, I want to get in too. This sounds like
yeah,
a great idea. And being a landlord is a much better place than being a landlord.
It is. And we've done that. And we've both done that where we've been a landlord. You know what? That's hard work. Why would I do that? I can make more money and have it a much easier
Yes.
process. Not that it's no work, but it's a lot less work than being a landlord. I'm here to tell you. So
Yes.
it's definitely worth it. If you want to be totally hands off, you do something like join a fund where you can be completely passive and just watch your money grow.
Yeah, absolutely. So one of the things people run into is like landlording, your capital is only as good as you can be, right? And
Yeah.
that's the problem with it, right? Is if you have 100 grand and you spend it, what do you do next?
Yeah, and
Right?
then what? And then you're going to run out of money eventually.
Yeah.
We all are. And then
Yep.
what? And then that's the question. With notes for years, this has been like the golden goose, the unicorn that we've all been looking for is funding for notes. And up until now, it's been very difficult to find, especially when you're talking to banks. Some private lenders, maybe, a big maybe, but it's been very difficult. The best way that you can get that done is you borrow from friends and family, or you start a fund or something like that.
Yeah.
Traditionally, that's been the way that you get funding to buy more notes. And then we're going to talk to Ryan today and see there's another way.
Oh, so let's bring him in without further ado. The summertime's getting long. What's up, Ryan? How are you?
I'm good. I'm hot. I am in the South, so but it's hot everywhere. So
Yes, I think Jersey's getting 95 today. Holy goodness.
well,
So
we have AC here, so I don't know.
that's awesome. Well, Ryan, you've been around for a few days in this space, and I think your experience is awesome. Um, you spoke some really high words at DME a few months ago back in May, and it was intriguing. Can you share a little about how you got into this space and your journey to today?
Well, the notes space lending. I mean, just in terms of lending, I've always been in lending, some form of lending, whether it's consumer and direct bank, banking, auto, you name it, subprime, alt A. That's a we don't want to talk about that anymore. But anything from any type of different lending solutions, MBS, the mortgage-backed securities, the commercial mortgage-backed securities, anything with assets, right? Whether it's but typically mostly real estate. Up until I met Nathan, I don't know, probably 3 years ago, he's, was talking about notes. And honestly, I mean, I'm familiar with notes, right? We trade them, we sell them, we buy them from a, banking perspective, bank to bank mostly, right? They don't typically buy from, private sellers. That's the issue. And so it's something about, having a solution for that. And that's, Nathan mentioned it, and something I've been trying to put together. We do alternative lending for, or different structured lending for retirement account. So non-recourse, which they do buy notes, and that's a big part of it. So that's where I was really interested in. All right, let's figure out why not do this product or put this
Yeah.
product together for banks and be able to facilitate it. And it's just about explaining how to handle it. And so that's really what we what I been putting together, just because of the fact that there's a huge opportunity. And I wasn't really aware of that. I think a lot of banks, they're not aware that there's a massive opportunity out there, because they really don't care.
Yeah, I think you're right. I think that, the banks are really big, right? They just don't get this space and they buy in trunks of 50, 100 million. They don't understand the seller finance world. That's too weird. They're more lazy than we are. Let's be honest here, right?
And we're
100%.
pretty lazy.
Yeah, right. So
They
it's,
don't want to figure it out, right? It's just kind of,
yeah,
we'd rather not.
Yeah.
yes. So I think for us taking advantage of the opportunity, just like seller financing, bridge the gap between a bank and a person who really can't qualify for the bank loans. So that bridges that gap. We're trying to bridge the next gap of how can we borrow money. But before we get into that, give us a little bit of your journey, how you got here. Did you start as a private hard money lender? Then you got into the self-directed IRA. What was the story?
No, for me, I was always underneath institutional banks, the big boys, inside their division that no one knew about, right? The most profitable division, which is which is a lot really like what we were doing. I mean, It was products that typically mortgage didn't do. The regulators maybe they were scrutinized a little more. So it was a kind of a hidden. They're always a hidden gem, and usually, like I said, one of the most profitable within the big banks. And it's a consumer division, and they call it consumer finance, and they keep it away from mortgage because of the
Yeah.
regulation. So always around corporate institution, never really. I mean, I've dabbled in some notes myself, and just some private stuff, but it's always been around institutional debt. That's always just
Hmm.
where I've been, working with different banks, credit unions, credit facilities, warehouse banks, and then getting into this alternative asset space was really
Yep.
about 7 years ago when I got into started learning about 401ks and IRAs and what are they and how do you buy all notes and tax deeds, liens, whatever.
Yeah.
And so that's really where it started. And then this question came up a lot. Can you leverage it? Will you help us? And typically, the bank I worked at, it was like, no, we're not we're not interested. It's just something we're not going to do.
Sure.
Just it's a heavy lift, right? It is just something that typically banks don't want to lend anyways. They have to. It's part of the requirement. They really need to lend, but we all know that it's a pain to get banks to lend and to explain to the credit officer, whoever you're dealing with at the bank. I tell all clients, you shouldn't come to me directly as if you're trying to do a loan. You should use a actual expert, broker, bank, someone that understands how to put the package together before you present it to me.
Hmm.
Yep.
And so it's so important because otherwise we're probably going to turn it down.
So real quick, explain why are notes so difficult to borrow money for, right? And let's be honest, for those who may not know, and there's plenty of them out there, notes is a lien against a property. That's what it is, right? You can't, and what you have to do is put a lien on a lien, which sounds very duplication like. And that's the heartache we have is that you're really hypothecating against that note, which means you're borrowing against the collateral and you have to foreclose basically twice if something goes bad. And that's the heartache of borrowing money and experience, right? So when you're trying to borrow money to buy notes and you're a first timer, you have very little collateral to borrow against. Um, people would like to borrow money from Nathan to go buy notes, right? And that's really a fund model kind of thought process versus other ways. And we've done a show on how to raise capital, fund level or not. And that's buying first your own note is the key here. First, guys, pump your brakes. Don't borrow until you buy your first note and work out and figure it all out. And then you can start looking at borrowing money. For those who have done 5 or 10 deals that had $250,000, $500,000, they didn't run that roadblock of what can we do now? I want to go. I have this great deal that could leverage me 14% yield on it, 16%, whatever is performing or non. But then they get stuck and they're going, well, I don't have 80 more grand. I can either go raise that money, but then what happens if that person runs to 10 deals,
Hmm.
right? And then they're running out of capital constantly. What is the first, Nathan? Did I explain incorrect there that the heartache we're having with borrowing to buy notes?
No, I think that's it. You go to talk to a bank, and I think that's the first reaction is like, you want me to lend on debt, and it automatically just doesn't compute. And that's the conversation I've had with banks over the years, and it comes to a very quick standstill every time I've had that conversation. So I more or less gave up, and then met Ryan, and I don't even remember how it came up, but I said something about maybe I mentioned how it was difficult to get lending, and you're like, oh, we could do that. I'm like, say what?
Yeah.
Maybe I spoke too soon.
Yeah. Exciting times, right? Um, but I think for most people, they don't realize why borrowing capital, unlike for real estate, is not easy to do. It's the structure of that note, right? So
Yeah.
people out there who are brand new to this space who may came from landlording say, well, I'm just going to do what I did for landlording. I'm going to go to Bank of Ryan, tell them I'm going to buy this house. I'm going to get a loan for, 70% of ARV. Or, in a situation with rental numbers or DSCR loan, why can't I do that with banks? Ryan, from your experience with the hedge funds, why does that not make sense for the typical note buyer who've bought one or two deals to go and go nuts and go crazy and leverage up?
So yeah, great question. And the biggest part about when you're doing this and what we're the difference, right? When you're just originating the loan or you're buying, if you're trying to buy that or it's collateral, right? It's all about the collateral. And even when you're doing just a regular typical loan, you see it all the time. I mean, well, we see it. There's buybacks. There hasn't been, but banks, lenders, well, there's a buyback clause, right? They have a buyback clause, and typically it's around fraud or misrepresentation. But now there's always something you can find. Oh, you know what? You didn't have this document signed correctly, or they
Yep.
didn't notarize this. They typically you can always, or a servicer can, who services, pretty much buys and servicing the debt, and there's, we can get into that later, but ultimately it's about, is the package good? Does it meet all the requirements? And that's number one. When a bank's doing it, it's their package, right? Their attorneys reviewed it, their attorneys approved it. There's no issue. When you're buying from someone else, that collateral, that note, then you're taking it as it is, and you still have to validate it. But I think that's one of the problems is there's so many different structures, and a lot of them, especially seller finance,
Yeah.
they may or may not have done it to code or to what's required, and then the bank has no collateral. So, or
Yeah.
lender, doesn't matter,
So,
bank lender.
without getting too particular, what does a package mean for those who have no clue what that package, the special package that you're talking about? Give me some example of what would be inside the package the bank would want to review.
I mean, there's, make sure that, obviously the title, right? Title, the deed, the note, the actual note itself. Make sure the recording of their signatures, that the customers, they have an application that's signed. Just normal that you would buy a actual real estate.
Yeah.
Had just a regular property. Everyone probably has gone out and bought a primary home or investment property themselves. So you have to sign all those documents, right? The difference is that's regulated, right? There's a requirement, there's a package, there's a doc set with states, with so it's standardized. It's easy to
Yes.
review that, like, that this is required, these documents are required, where when you're doing seller finance notes, or it's all over the map.
Mhm.
Yeah.
And so that's the, I think, the challenge, right? Is there's not a consistency or structure around this.
Yeah.
Yeah. Listen, if you're seller financing, underwriting is required, right? You got to underwrite if the borrower occupies a property. Talked to someone just the other day and says, but listen, I mean, why? I mean, I did it. I look at their income and said it worked out well. It's
Mhm.
not proper underwriting. And the fear is if you don't do proper underwriting and it goes bad, what happens, right? Listen, we can't predict things will be future. And some people say, I do the best underwriting in the world. And I said to the gentleman, listen, you can be the perfect underwriting. Tomorrow, something can happen
Yeah.
that's outside anyone's control, even the borrower's control, right? So you got to make sure if you're doing underwriting, that has to be crucial. The documentation has to be right. The note has to have all the different things in it. We've done a show on that before too. So
Mhm.
those are crucial things. Not even if you're not looking to sell. It's if you're creating and something goes wrong, that's what happens. Now
Yeah.
let's take it a step further. Nathan, do you want to add anything to that at
Yeah,
all?
like it's, at the end of the day, is the note enforceable? So if they quit paying, if there's something that happens and we ended up going to court, uh, is that note going to be able to go through the whole process and actually complete a foreclosure? That's at the very end of the day, that's what we're concerned with. Is, can it actually do what it's supposed to do? And sometimes the answer is no. Like, if when we see those one-page notes, I'm telling you right now, that is not good enough. That is not
Yeah.
going to cut it if that gets in front of a judge or a half decent lawyer on the borrower side. That's going to get destroyed.
Yep.
And then what? You bought nothing.
Yeah.
It's backed by nothing, and try to collect on that. That'd be tough.
Yeah. Well said. So we flip it over, right? Now you've seen all the issues with creating these things. It's for you to be able to borrow money, right, on a note that you're going to buy. Ryan, what's the first step that I have 100 grand. I bought two notes for 50 grand each, and I want to buy two more from Nathan, who's selling me a killer deal. could be performing, could be none. What are some of the things that I got to make sure that I'm looking for in the beginning to be able to borrow that capital to buy those two notes?
Like Nathan said, you have to make sure that you actually have collateral, like that, the actual package will stand up. And I think even before you buy it, like, let's review like a sample. And it's just like buying a property. You don't go typically, at least if you want to lend on a property, you send the property to a lender and they review it and make sure that collateral works. That note, the package you're purchasing is the collateral, right? That's it. It's not the house, yeah, it's out there, but you're buying the note, the package,
Yeah, the debt.
and that's ultimately what. So that's really that's your appraisal, that's your house that you're buying. But it's
So Nathan's collateral package is perfect. It's everything we needed to do. What is my first step? Am I using my existing portfolio? Am I using the portfolio of Nathan's that I'm buying as my leverage? What am I using
Yeah, how
to
do we
borrow
approach it?
money?
Yeah. So you're no, you're I mean, you're typically, if you would have, well, if we're purchasing, right, we
Yep.
would, what we would do is we'll lend, Nathan will put down, say, from his fund, or from, personally, you're going to put down, say, and I'm going to say the note's 100,000. Let's say you're buying $100,000 note. We're going to lend typically, we're going to give a 60% leverage. Let's say, it's 50 to 70. Let's just say 60, for, round numbers. So we're going to give 60,000 on that $100,000 note. Nathan's going to put, come with the other 40,000. And that's what we're gonna have first lien position. We're gonna actually, well, we're gonna have the note, as the collateral. Nathan would be in second behind us, of course. So that's ultimately what that's our collateral package. It's important to build to make sure it's assigned correctly. That we can actually assign that to us. Like, we're protected, like you mentioned about, the ability to repay. There was an MLO, on the actual, that they on the original lending,
Yeah.
when they originally did the loan. Even more so now, that's important. That's there's no issue, right, when people are paying and things are great. We're not even talking about this. it's
Right.
it's when there's starting to be buybacks, and we're seeing that, like we talked about at DME. You're starting to see the shift, appreciation. The values are going down. We're, in different markets. So now it's so easy, and I see it on commercial, residential. It's easy, but once, no one cares about this until it goes to court, and they stop paying, right?
Yeah.
Then it's like, oh, let me see your proof. How are you going to, and that's exactly what you said, the judge, how do you prove it? So how do you make sure that you actually own that?
So I think it's really interesting. 2 months ago, 2.5 months ago at DME, you were part of that panel where we're like, we're seeing cracks, like big time cracks. And just in the last week or two, I've been starting to see news articles, which is about right. They're about 2, 3 months behind, generally speaking. And they're starting to bring up these kinds of issues that, oh, we're starting to see defaults increase and we're starting to see these problems and these cracks and things. And we're like, yeah, yeah, we said that already.
Yeah.
Absolutely. And that's why it's so important to have, the proper package. And it's different when I say, like, every, if I put together different credit facilities, and I go to these bankers, and try to say, hey, this is an opportunity, and I have to, have to put it together for them ahead of time, right? I'm not saying, hey, I have this. I'm saying, all right, if I bring you this, will you buy this? Will you buy
Yeah.
this package? And
Yeah.
it's different across. Every bank has their own appetite. They have different footprints they want to buy in different areas, so they all have different requirements, from not just notes, but we all know it. Every bank or credit union you go to, you're going to get a different answer. Oh yeah, we can do that, or we can, or we're going to do 90% of the deal, or 60%. It ultimately depends on their bucket, what's full, what they're, if they want to expand in that area, if they need CR, the credits. So it just kind of depends on, it really depends. It's hard to,
Yeah.
there's not a set, like, this is going to work, which is, I think, was what we need to do, for this, is, put a little more structure around it.
Yeah.
Yeah. So we have some couple questions coming in now. An example: what percent of a note purchase of use UPB? What percent of it can be borrowed against or leveraged against?
You're going to safe number, I'd say 50, but up to 70. So you're looking at 50 to 70 range on that action, never above 70. At least I'm not seeing that. I mean, I'm not saying it's not out there from private lenders, but from a banking perspective, they're going to want to be at really more closer to that 50 to 60 range.
And are we assigning that note to the bank? Is that
Yeah,
note getting assigned to us?
the note,
Does the
yeah, would
purchase
get
and sale
from the bank.
agreement go into our name or the bank's name? That purchase and sale agreement that we're buying from Nathan, does that purchase and sale agreement get signed to us or to you, the bank?
No, no, it will be assigned to Nathan typically,
Okay.
or and then there's an assignment clause in there too for us, for the actual security
So
instrument.
Nathan's selling me an asset. That Simon a mortgage will be assigned to me. That personal sale agreement will be my personal sale agreement. And then does Nathan know that I'm using you for leverage?
So there's two ways to look at it. So yes and no. So yet you could there's that structure. So where Nathan's really the servicer, like a sub servicer, and then
So
there's
he's a lend. He owns the note. He's a seller of the note.
and then and I'm assuming that you're collecting that you're servicing it. You're not, if you're selling it. So sometimes we'll actually take it completely over, and you're just getting the leverage, so you do go out and buy more. Where we're not, and then otherwise you're actually servicing it yourself.
So
So
if
it's
he's
just like
using
when you
his, but if he's using a servicer, a third party servicer like Madison or FCI, right? And he's just a note originator or a note buyer like we are, and he sells me that note, right? Does the note seller at all know that I'm leveraging to buy this note?
they and that's in that circumstance they wouldn't. They're not going to know. Now, if when we take sometimes we'll need to take over, depending on the situation, we would take over servicing. So then they would know that, hey, we're taking that note. Doesn't mean that they would know where there's leverage out there. So
Okay,
in reality, they wouldn't necessarily know that.
gotcha.
Interesting. So what are some things that matter to you? Like I know when I buy a note, one of the first things I look at is what's the interest rate on the note. Is that something that factors in for you of how much you'll lend on it?
Not necessarily, no, that, so no.
That's what I
We're,
figured.
but we are going to lend to you. So basically, we're lending to you your person, and you're going to, typically personally guarantee it. In some circumstances, we
Sure.
definitely want that, but we're
Yeah.
going to lend. So we're in essence, we're giving you almost a line of credit
Okay.
against your collateral. And so
Yeah.
that's an easier way to look at it. And it's going to be a line of credit that 8% or 7.5, 7.75, and we don't, as long as it covers, right?
Mhm.
We're not too concerned about that. So if it's below that, then it's probably not going to work.
Yeah.
There's just, that's where we're at on terms of the rate
Yeah.
on the actual to like the line of credit per se.
So what we do is you're going to fund me 50% of that note purchase, right? Do you? And we'll get into the second performing or non-performing. Basically, I buy it. I kind of sign it to you. All the servicing gets held by you. I don't have a third party servicer. You are my servicer. You're doing all the letters, all the information for the borrower, and you send all the rest of the letters out. All that's good. We then work together to continuously do it. Does it change? I'm just reading another question we had. Before I get there, Cody asked over on Facebook, what are the 3 to 5 items a lender must see when evaluating a collateral package? I think we covered that, Cody. It's what are the key items? I mean, correct me if I'm wrong. The note, right? The collateral from the beginning, the HUD, everything else, the underwriting of the borrower, making sure the origination packet was solid, the note, the deed, as well as any kind of title work that was done up. Would that be the key items?
Absolutely. And Nathan, you can add to that, but that's what that's the main, that's what we're looking at, right? I mean, ultimately, right. We're going to look at the property itself and just make sure the collateral is there.
Sure.
So we'll do, the BPO, like a typical, virtual appraisal, just to make sure that the actual collateral is still there.
Gotcha.
Are you guys using Zillow or like what kind of
No, we have a third party appraisal manager company that goes out and
Okay.
they actually do they have a satellite view of the property. So
Gotcha. Okay.
so it
Okay.
drills down. It's a pretty slick system. So
Okay. Because if
Awesome.
you lend on this estimate value, we're in business.
Right.
but
So,
ultimately we're lending on the note itself, not necessarily
Yeah. Right.
the hard asset.
yeah.
Yeah.
And do you care if it's performing or not? Does that affect you at all?
It does. So we typically we're not right now. I don't have the really the solution for non-performing for leverage. Now, it would be, if we did it, would be much significantly lower leverage.
Yes.
Yeah, sure, makes sense.
We're
And
talking 25% of the UPB. So
Yeah,
so you have to have some capital, guys, right? This isn't a 100% financing menu to do. If you want to do that, take a look at our raising capital episode with Steve Lloyd, a bunch of episodes ago. Um, Cody asks, "Is this like a warehouse line?" Yeah, it's similar to it, but I don't think you have a set number of. Hey, Dave, you have $1 million you can go buy.
yeah,
Are you giving me $1 million, or am I leveraging against the collateral, whatever it's worth at that moment?
and we do. So one thing. So we do this, right. And I typically, I've done, when I'm at banks running the actual credit office, we do it for certain clients, but they have experience. They have, we know what they're doing, and we'll give them a $1 million line of credit so they can go out and do exactly what we're talking about. But that's a different situation. If it's the first time, or you're getting started, you're going to look at least 50% down on that actual note. And then as you get experience, then you can get up to more of the 70. You can go up maybe even 90. So it just kind of it varies.
mhm.
From that perspective.
So I'm going to ask the beginner question here. What if I don't know notes and I go to you and I have money and I send you a note that's terrible? Can I use you to bounce an idea off and say, "Is this a good note?" I mean, or would they
I
get
think
blacklisted?
no, I don't know. If they go to the bank, they're not. Then the banker's not going to. It probably won't even listen to them, and they'll never get a chance to probably present that again. I would say go to Nathan or go to David.
Yeah.
Go to the experts. The network that
Yep.
you've created is. I would say, no matter what you're doing, I don't care if it's notes, buying real estate, go investing in syndications, crypto. I don't care what you're doing. You should. When you start out, you should go with an expert first. Learn it. It's okay. And be a passive investor, put some money in, and then do your own. So
Well
So,
said.
Dave, we've been seeing more and more assets coming up. I just had one the other day, just as an example of, if you're going to structure a note, if it's something that you're creating, come and talk to us first. So
Yes.
this
Where's that light bulb moment?
this poor lady, she put together a note. It's on raw land at 4% interest, and it's got a balloon set for next year, or in 2027. And I'm just like, oh, that's it, uh. So I had to write her back and be like, okay, first of all, I don't buy raw land notes, but this is going to be a really tough one to sell. You're going to take a really huge discount because of this and this. Had someone approached us beforehand, I'm more than happy to sit with you for half an hour and just say, okay, so if it's got
Yes.
this and this and this and this, and I wish it was a formula. It's not necessarily a formula. There's always going to be compensating factors. Um, but have a conversation with Dave or I or somebody else that knows something about notes before you structure the note, so that if you're planning on selling it sometime in the future, we can help you up front to make it much, much more valuable. Anyway, that's my pitch on that.
Similar thing. Ran a guy. He told me we always owner finance above market value, which I totally understand. And I said, "Why
Yeah.
you do that?" He said, "The reason we do that is because these people have no other option but to go through us." I said, "Great." And he says, "My notes are at 7%." I said,
Uh,
"Why would you 7?" He said, "Well, we can't really, you know." I said, "The banks are 6, 6.5." Well, we don't want like I go, but you just said on the other side that you raise your prices because you're a private thing. Why are you doing it 7? So
yeah.
yes, owner finance people reach out to us. Even if we don't buy it, we're going to help you structure in a way that you could possibly sell it.
Yeah.
You're doing a favor to borrowers. But to back to Ryan, that's the pieces that Ryan needs to be able to give you the leverage, guys. Right? He
one
can't
hundred
leverage a
percent.
3% note at
Yeah.
50%. I'm telling you, he's not going to do it.
Right.
I mean, you're gonna. I mean, unless you want to be negative. I mean, we'll do it. I mean, if you're going to be negative on it and paying every month. I mean, and the biggest part of what you mentioned about when you're doing this is we hire an attorney, a doc attorney. I mean, have someone review your docs.
Yeah.
We as banks, we have third party doc attorneys for a reason, to
Yes.
protect us, to make sure it's done correctly. Or reach out to
Yeah.
David or Nate.
Yeah.
You go out and you do it free will, and you go on Google Sheets or whatever, and even have someone review it. It's worth the extra $500 or whatever.
And make sure it's a foreclosure attorney. I just talked to someone the other day and said, "Oh, I got a transactional real estate attorney look at it." Listen, they probably haven't done a foreclosure in their career, and they should have said no to you.
Yeah.
So, first off,
Great
talk to a
point.
foreclosure attorney because those are the people who do day in, day out, and they may see something new that you didn't know about a week ago, 2 weeks ago. Things are always changing. Josh on over on LinkedIn watching us asks, what is the servicing fee from the bank when servicing a loan? What is your fee for servicing a note?
Good question.
That is typically most service fees are, and we're not going to pass on. Normally, if a bank's servicing it, they take it and they say, and and it's in their price.
Yeah.
If you're like truly hiring a third party servicer, it varies, but you want to figure a quarter point, is a typical servicing fee. It could be higher, but that's pretty
So it's
standard.
different from our world. We pay $30 a month flat. We pay a flat
It's a
fee.
percentage, yes.
Yes, well, you guys are more percentage wise. So if that loan's only 50 grand, you may not pay a lot compared to what our flat fees are. Good question, Josh. When we're doing this kind of stuff, what happens if a default happens? Obviously, we have to come up with the capital to do the whole foreclosure. How does that affect our relationship when you're borrowing money from us? And is there anything in the beginning to put up as additional collateral to protect you guys if something bad happens and we just walk?
No, that's a good. Yeah. So there's typically a reserve requirement. That's why the banks typically do any type of lending. They want to have some form of, they're looking for a deposit. They're looking for, so they can have deposits so they can do more lending and make money. And there's typically anywhere from a 5 to 15% reserve requirement of the actual. So we're lending 100,000 on that note. We're going to want to see 5, 10, up to 15,000 in a reserve account for that rainy day fund, or if it's a default. And but typically, there's also a clause in there to be put on notice if there is a foreclosure. So us as a bank, we want to, you'll get notified, right? But we're going to get notified as well. So we're aware that this is happening.
Gotcha.
And then we're going to reach out to you and say, all right, what are we doing?
Yes.
Or we're going to call the note.
Yeah.
Sure. Yeah.
When it comes to states, do you guys have a preference of what states you are or aren't? And if it's in Cook County, are you saying no to it completely?
I am.
That's a possibility. No, we'll look at everything nationwide. Major metros. You get into rural. It's all about comfortability. And there's but we will look at nationwide. So no, there's not really a restriction there, but certain areas might be a more limited what we're going to do.
Gotcha. How about,
Okay.
do you ever look in to see if the borrowers ever, we're echoing off you, Nathan, I think.
Is that me? I don't know. I hope it's not me.
What happens if the borrower, the buyer of the note is not licensed in the state, doesn't have a debt license? Does that affect you at all?
You said if they're not licensed,
With the debt license, they don't have a debt license.
no.
Okay.
So I mean, now I would say case by case, but
Yeah, I gotcha. Okay.
Hey, you know what? I am so sorry, guys. I've got an emergency that I've got to deal with this eviction. They just filed an emergency motion and it's in court currently. I got to go beyond that. I'm so sorry.
That's okay. We will talk to you soon, Nathan. We'll continue real quick on this.
All right.
Thanks, Nathan.
Thanks so much, guys. We'll talk to you later.
Awesome. So let's continue with this real quick, right? So when we have this going on, we're looking at the fact that the buyer of the note really has to be in a position where they are seasoned enough to know what they're doing, that they're also understanding what the collateral looks like, and that the note seller has everything they need to have, but also understand why a note is priced the way they're priced. Would be accurate.
But I'd say that's accurate. I mean, yes. I mean, I would say that's accurate. Yeah, absolutely.
Okay.
Yeah, and I think that's perfect. So
Okay, awesome. With that, we had a question from Cody over on Facebook. Um, how do you talk about how you lightened to a fund? Do you lend to a fund?
We'll look at it. That's a different structure, and it's it would just depend on the fund structure itself, and which we'd have to do a little more due diligence on how it's ran. But I would say right now, probably that's gonna be pretty limited.
Okay. Okay.
Us
Um,
us personally, yes. So
what if they hypothecate against loans they already have?
we're fine with that. So actually, that's something that if they're absolutely if they want to go and they're capped out and they want to go out and get some leverage against what they have currently, and yes, we would definitely look at that.
Okay. Awesome. Um, what are other things that we may have missed that people should be aware of? Gotchas, later on thoughts, disposing of the asset, or even selling the asset. Is any of that affected in this process?
Not so much. I think the biggest thing is work with a licensed MLO up front when you're doing this if or make sure that was done up if you're well obviously if you're doing seller finance, but if you're buying one, make sure that that was done correctly. Do your own due diligence. Have your docs go with an actual attorney. Put together your doc package that we're okay with, or whoever you're selling the loan to, that they review that and so they can give you feedback. And then just when you're dealing with and that attorney, make sure they're licensed in those states, make sure they understand the state laws, because every state's they have nuances. So that's
Gotcha.
from that's where we get in trouble, is
Yes.
when they don't it's just not done correctly per that state.
Gotcha. Do you guys also open to collateralizing if someone's doing hard money lending? Is that at all helpful?
Oh yes, that's if they're doing that's typically what we were doing before, is we were lending to we were doing against hard money, for hard money lenders. So they would go out and they would lend money, and they would put the whole package together, and we would lend against that package.
That's awesome.
And that's exactly that's a lot of what we already were doing.
That's awesome. Awesome. Before we disconnect, I'm going to ask Nathan's $10 million question we always ask before we can disconnect. Unless there's someone with some other questions before we do, we're going to put a crystal ball in front of you. Yeah, and it has to work. It's been plugged in, it's Bluetooth, whatever capabilities it has. It's ChatGPT on steroids because it's your brain. Where do you see 6 months a year with housing, inventory, notes in general? What's your crystal ball looking like?
I thought I knew before. I tell you, if crystal ball, I still believe we're going to see some improvements in rates. We have to. I think it's a good opportunity to position yourself for the what's about to happen. We're seeing opportunities out there, and prices, they're coming down a little bit. So it's not maybe not 08, 09, but there's still an opportunity to go out there and acquire and invest. But besides that, if you ask me in May, I would say, oh yeah, I'm very bullish now. I knew there was something that was going to happen, but we were going to have a big dip, which we are. We called it when we were on the panel and back in May,
Yep.
and we're having it right now. We're having that correction, but it's going to come back, and it may not be until the first of the year, but we'll
Are you
definitely.
seeing days on market change? Are you seeing house the price values kind of just flattening?
It's all above. Banks calling notes. They're asking for more liquidity, capital requirements. They're not extending these 3-year deals are coming up on renewals. They're asking, all of that. We're asking for additional collateral, paying down your current note, even if it's not required. Banks are calling, the lenders are calling notes,
Wow.
and or saying, hey, you got to put another 20% in our bank, reserves, or we need audited financials. All the above's happening. So that's it. 100%. We're seeing it. We saw it on commercial already, and now we're starting to see it on residential. We're starting to see some of that. So
I do see a question over LinkedIn. Do you guys give funding for wrap note people who are creating wrap notes who want to give some money to the underlying borrower in
it's
that world?
difficult. I'd be very cautious of that. How about that? I mean, I think that's something that we get that question, and it's especially
Yeah.
the lenders are really looking at those. They're digging into that, and they're gonna I'm seeing more of that in the market if they're calling those, especially those
Yeah.
wraps, because they
Yep.
didn't get approval up front. And did you qualify the borrower?
Yep.
So I would be cautious.
Yeah, absolutely. Well, Ryan, it was a pleasure having you. Live always has surprises. Hang out for after hours for a minute with me. We'll just round up some stuff. But for everyone else, thank you so much for tuning in. I'm sure Nathan and I will be back in a few weeks. We have a few shows planned. Be taking some of the summer off, but we'll be back on. Find everything you want on the podcast, on the website, and as well as on the Facebook groups. Have a good Friday, everyone. Enjoy the weather, and we'll see everyone soon. Take care, everyone.